You're listening to Smart Moves with your hosts, Ann Riley Caldwell and Matt Wilson.
Hey, welcome to Smart Moves with Ann Riley Caldwell and Matt Wilson, where we're here to help you make smart and strategic choices when it comes to all things buying and selling in Middle Tennessee, and maybe even some life advice too. We just never know where this podcast is going to go. But anyway, I'm Ann Riley Caldwell, not your ordinary agent. I'm a realtor here that covers the Middle Tennessee market, and I'm here with my co-host, Matt Wilson.
What's up, everybody? I'm Matt Wilson Mortgages. You can search that on any of your social media platforms and see my lovely face there.
There you go. So today we have a hot topic. Anytime people ask us, what do you think the market's going to do next? It's always a good question because right now we had the surprise government shutdown. So the federal government, except for very necessary workers, which even some of those are not coming to work right now, the government shutdown definitely impacts your mortgages, which therefore impacts your buying and selling timelines. So today we're going to kind of roll through some different aspects of financing for buying a home, and then also how it impacts on the seller side, and especially if you're buying and selling at the same time. You have to look at both sides of the transaction, so don't forget that. So we'll talk a little bit about that as we go. But government shutdowns and your mortgage, what buyers and sellers need to know. So Matt, what kinds of questions have you had and things have you run into as we're kind of like a few days into this government shutdown with no end in sight?
Yeah, so I'm getting the usual, is the sky falling? The sky is falling kind of questions. You know, people asking me, is their loan dead? Can they actually buy a house right now? Can we close on their house, et cetera? And for the most part, the answer is like everything's kind of business as usual from the consumer standpoint. There are definitely some things that are being impacted though. So I don't want to mislead anybody. Like, you can close a loan right now. Some kinds of loans you cannot. To dive a little bit deeper into that though, it's not going to be your usual process. Like buying a house, I just did myself. Actually, you can go ahead and roast me for the fact that I think a couple of weeks ago I said I wasn't going to buy a house, and then I turned around and bought a house. So anyway, we do that too. But
Yeah, I told Matt I was going to give him a hard time because if you watched one of our prior episodes, he actually said the words, "I am not buying a house anytime soon." And literally like 2 weeks later, all of a sudden he is buying a house. So I told him I was going to give him a hard time for that. So this is how buying and selling houses roll sometimes. I get people who say, I'm never doing anything. And then 2 weeks later or 2 months later, they change their mind. So anyway, it's all good if you do it.
Or sometimes your wife changes your mind. Either way.
There you go.
So I get it. Like the process is not a fun process for the most part. It's exciting to get to go pick out a house, but it's nothing but, stress and paperwork in the meantime till you get to move in. And then it's stress because you got to go move in, and because your wife trades tables with her mom and it's heavier than the one we started with and things like that. But anyway, basically this is just going to add another layer to it. So as long as you go into it knowing, hey, this is going to be a little bumpy, you're going to be fine. Don't want you to think that it's going to be a completely turbulence-free flight, because for the time being, there's added external factors that neither you or I can control. The only people that can are in Washington, D.C., and they're currently picking their nose or something. With that being said, the most direct thing that's being impacted is USDA loans. USDA loans require that the USDA underwrites them even after the lender does, so they can give final commitment on them. And they're not issuing final commitments while the government shut down. So if you got a USDA loan in process, you're kind of stuck sitting on your hands between now and whenever the government opens back up. And I can assure you that when they do open back up, there's probably going to be a pretty substantial backlog. It's a real shame because USDA loans, for those that qualify for them, are a pretty awesome product. If you really need to buy a house right now, I would probably look at asking your lender if you could flip it over, if they hadn't already asked you. Flip it over to maybe an FHA loan, add down payment assistance or something like that. Might be a little more expensive, but it may also be the reason that your loan actually gets to close. That's that.
We should say real quick, USDA loans are rural development type loans. So there are specific areas outside metropolitan areas that are in a USDA territory or on the USDA map for us realtors who have to go look at the map. So, if you're buying something in the heart of Clarksville or Nashville or something like that, USDA probably won't apply. But if you're outside of a main city, and Matt can explain that more, then you might very well be considering or in the process of a USDA loan.
Yeah. Yeah. USDA. Here's the thing too. It doesn't have to be like a house in the middle of a cornfield either. As long as you're in what's considered a rural area. Google it. There's links. We could probably put links in the description here so that they can see for themselves. They could search addresses to see if it qualify USDA. But at any rate, FHA is going to have issues with case number assignments potentially, which is just a fancy way of saying like we have to register the loan with the FHA early in the process so that they've got a number associated with you. Think of it like a social security number for your loan in a way. And when that's going on, what you run into is slower loan process yet again. The other big thing is like anything that's going to require humans to take care of in the process of the FHA loan, that's like actually with the FHA, not your mortgage company, is going to be impacted because the humans are not at work right now. At least the majority aren't. They're running some sort of skeleton crews to, keep the lights on and keep it from going all Y2K in there, but like nothing's really happening. The biggest thing is, as long as you don't have to have a condo approved that's not already been FHA approved or have to have case numbers transferred from one person to another or appraisals transferred or things like that, it's probably still going to be okay on an FHA loan. It's not like a complete hard stop like it is on USDA. Now, conventional loans, those are pretty much getting off scot-free right now. Not a whole lot's changing with those for the most part, with the big exception of your verification stuff. So if, for example, we need to do some sort of Social Security verification for the loan, well, the Social Security office isn't exactly staffed right now. So probably not going to be getting that back quickly. In addition to that, if you need to get tax transcripts, kind of the similar situation with the IRS right now. It kind of sucks because the IRS is closed. They're not working, but God bless America if they're not collecting your taxes all the same. So anyway, that's going to be your biggest complication there. Bouncing over to VA stuff, like it's going to be fine. That may be a touch slower potentially. Really kind of similar to FHA as far as that goes. Like if it's anything special that needs to go on as far as like case numbers or appraisal transfers or something like that, that's going to be where your delays happen. The certificate of eligibility stuff, like in my experience over the last couple of days, we're still getting those just fine. I hadn't had anything slow down on that piece of things because assuming it's automated, for some people, for some veterans, for some reason, their COE is not automated. So they may be up a creek without a paddle for a minute here. So, the biggest thing is like now's not the time in history to be trying to go out and close a house in 7 days with a mortgage attached to it. It's probably not going to happen very quickly. And, just be aware of that going into it. Everybody's going to be just fine. I mean, we all know that at some point the government's going to open back up. We don't know when. But, historically, it's a couple weeks, maybe 30 days. So far, what are we? A little over a week into this thing. So probably be okay in a couple more weeks as soon as everybody gets their head out of the sand and decides to start working together again.
Yeah, by the time everybody sees this, it'll probably be a couple weeks, but we're anticipating it will still be going on at that point. So with VA loans and FHA loans, what questions would you advise someone to ask you or whoever their loan officer is, as far as whether or not it might take longer than kind of the 30-ish days that we shoot for to get something closed?
Yeah, the biggest thing is going to be, how are you, like, how are things getting verified? Because sometimes we can go without having to go to the IRS. Now, the big thing is on your front, make sure that you've got your ducks in a row, because if I've got a borrower that doesn't know where their W-2s are, well, then that's not going to be very helpful. That leads us to have to go to the IRS for things. That's the biggest thing you can do to maintain control is just, knowing this time in particular, if your lender's asking for documentation, it's possibly something we wouldn't otherwise ask for. We're just trying to get around having to go external for it to get it closed in the meantime. So that's one thing. Another one would be like, are we able to do any of these verifications like as a post-close condition? Sometimes the answer is yes. Sometimes the answer is no. It's worth asking, but it's not guaranteed by any stretch. And then, in the case of a USDA loan, you just want to ask, do we need to flip? should we change this to a different program? Can we explore other options? Do I qualify for other options? Because it just frankly isn't going to close until the government opens back up. And like I mentioned before, it's going to have a backlog when it does. They were already, USDA's underwriting was already running about 4 or 5 days behind by loan submission date. So, it's going to be 4 or 5 days behind, plus whatever files happen to have got thrown in there between then and open it back up.
Plus all the ones that people are holding on the side to throw in as soon as it opens back up.
Exactly. It's going to be a lot. That's going to be, now is probably not the best time to try to go after a USDA loan, even though they're probably going to be cheaper. You got to ask yourself, is it something you're worth waiting on, that you're okay waiting on, and is the seller going to wait on it for you? That's the other thing as a seller, other aspect of all this. I work somewhat frequently with people that are either government employees or contractors to government organizations. I talked to a couple of those contractors yesterday, and most of them are hanging out at home twiddling their thumbs, waiting until they get called back into work because no work's happening. Well, we can't close on their loan in particular, because if we do their pre-close verification of employment, they can't do it yet. It's going to say that they're shut down. So in those situations, I had to be proactive. I called the listing agent and just accepted one of the contracts. And we're just like, hey, look, just so you know, it's a decent file. Like, the borrower's got nothing wrong with her, but the government shut down. Well, none of us can help that. And given that, I just wanted to give you a heads up that if for some reason in 30 days the government's not open back up, we're not going to be able to fund the loan until it is. So I think it's just a matter of staying proactive with your communication. And as the borrower, you can be proactive all the same. As the buyer of the house or the seller, you can ask those questions if your agent or lender isn't, to make sure that you're actually covered and everybody knows what's going on. Because most people are reasonable. They're not going to flip out because it closes 5 days late because the government was shut down. But if they find out the day of closing, that's why it's not closing, then that becomes a major issue for everybody.
Right. Yeah, no, that's a good point. I mean, thinking about the fact that, if a buyer is a government employee, have they been shut down in that sense, and are they not making money and therefore they can't close? Because we focus on the loan aspect of it, which is obviously a huge piece of it. But, thinking about the fact that the actual buyer situation may be different. And if you're a seller who is also trying to buy a home, all these things impact you on both sides of the equation. So as a buyer, are any of these issues affecting your ability to close on the house that you're trying to buy? And on the flip side, you obviously have a closing date timeline. Is the buyer who you're under contract with to buy your home, are they having any of these issues? Because then that could potentially change the closing for both of those transactions. So it's also important to remember that there's a domino effect that could be in play.
Yeah, 100%. Because even if you can sell your house and pay cash for another house, surprise, you may not have a finance contingency, but you have a finance contingency. It's just not yours. You've got a finance contingency for Bob that's buying your house, is what it is. Which our company does have programs to help alleviate that issue. I won't turn this into a sales pitch, but there are options out there that can help make it where you don't have to sell the previous house potentially. Now, another big thing that's kind of like a not everyday type issue, but is an issue potentially if you run into it, is flood insurance. With every mortgage in America, you have to have a flood certificate. That flood certificate basically says whether or not that home's located inside a floodplain. If it is, congratulations, your insurance cost probably just doubled, if not more, because you're going to be required to carry flood insurance. It's obviously to make sure that there's coverage there if the thing fills up with water or whatever. Nashville back in, what was that, 2011, 12, somewhere around there?
2010, I think.
2010. I was off by a year. Flood insurance, for those that had it, is the only reason their house is still standing, or got to be rebuilt without costing them a fortune. The problem is most flood insurance policies are run through the government. Most of the cheaper ones are. So if you're in a situation where you've got flood insurance on the house that you're purchasing, you're probably not going to get that finished up before closing. There are private options, but those private options, in my personal experience, have been super expensive relative to the public options. You might be able to do some transfer stuff. I'm not 100% sure though that you'll get it done quickly, like transferring flood insurance from the seller to the buyer, because of the shutdown all the same. I mean, it's not not likely that they've got a full crew running whatever buttons have to be pressed in the background. And as we all know from recent news over the last couple of years, the entirety of the government's run off of a freaking TI-83 calculator and chewing gum. So I don't imagine that they're going to have a whole lot of technology helping you out on that front.
So there's always that in the background too. I suppose with flood insurance, if you could find a private option, even if it cost you more money, you could probably do that in order to get it closed and then switch it later.
Yeah, we probably should bring an insurance agent on at some point. I don't know the details of how you can change it. Like, I don't know if there's any restrictions on changing after the fact, but assuming that that is the case, then I'll disclaim all of it. Check with your insurance agent. Make sure you could change it after the fact.
So it's a good question to ask. Is basically we're setting you up
Yes.
with questions that you can go ask. So definitely check with your insurance agent to see, because even if it's somewhat painful in the beginning, it might get a house closed for now, and then you can try to find a cheaper policy later if that's an option. And then as long as it doesn't kill your debt to income ratio.
That too, which it may.
Yeah.
I saw a quote for it.
Oh, go ahead.
Yeah, go ahead.
Oh, I was just going to have to explain what a debt to income ratio is and how your flood insurance could keep you from closing also.
Gotcha. So debt to income ratio is otherwise known as DTI. It's basically just the formula we use to figure out how much money you've got left over at the end of every month. To do it yourself, all you have to do is take your monthly gross income before taxes are taken out and divide your monthly debts into it. Don't divide in your phone bill or anything like that, but just whatever your actual debt payments are, and include your housing expense. The problem is flood insurance is included in part of your housing expense. The other day, I actually got a flood quote for somebody that was considering a home in a floodplain, and their flood insurance was about $500 a month. So, they could either buy that house, which they didn't, because of that, qualify from a debt to income ratio, but for the same payment, they could have paid $90,000 for a different house, just because the insurance wasn't going to be as awful on the next house. So, I'm not saying don't buy a house in a floodplain, but definitely get a quote on the flood insurance before you go out writing an offer on it.
Yeah, Matt and I just closed a loan with a house in Hendersonville that somehow was in a floodplain. That didn't make a lot of sense. So yeah, the buyer had to call a ton of companies and finally found one that fit his debt to income ratio. So that's why we're here to walk you through, because some things turned into challenges that we did not anticipate.
Yes.
So with down payment assistance, I mean, some of what people use here in Tennessee goes through THDA. So I'm assuming that's not really affected since it's a state program.
Yeah. Any of the state-run ones are pretty much business as usual because we don't have to get the feds involved, the man involved. We're in good shape on most of those. Really, other than USDA having the hard stop, the rest of everything is just maybe at 75% capacity as far as getting it done. On the lending front, we're absolutely doing everything we can to, at least speaking for my team, to make sure that we're moving things along. Obviously, if we don't, nobody gets fed. Things are going to be a little slower outside the doors. Now, another big thing too is you've got a lot of economic uncertainty going on just because of the shutdown. So wanted to speak to that just a little bit for a second. Like, interest rates right now over the last couple of months have trickled back down to about where they were this time last year. We're recording this in October of 2025. And with that being the case, mortgage applications, buyer activity and stuff has ticked up just a bit, obviously. Well, the thing is, it started to slow down because of the government shutdown, because people are like, oh my goodness, what's going to happen? Well, unless you work directly for the government, nothing is going to happen to you specifically. If you work directly for the government, you're probably going to miss a paycheck or two, maybe more. We'll see how long it lasts. But by and large, overall, historically, over the last 3 actual government shutdowns that were more than 15 minutes of fame, there's really not been any major impact to GDP. There's not been any major impact to the actual jobs numbers. There's not been any major impact to the inflation numbers over those time frames, and that's looking back quite some time. That's looking back quite some time on everything. So you've got a pretty good historical track record to say that the stuff that's going on right now is probably going to continue going on from a reporting standpoint. Now, the reports are kind of where things get screwy. We missed a jobs report that was supposed to come out that would have driven interest rates either up or down. The thing is, that jobs report everybody anticipated to be pretty ugly, which would have driven interest rates down, but it didn't come out because the BLS isn't open. So with that being the case, I imagine if they treat it like they do every other report, assuming it opens back up in time for the next report to come out, people are basically just going to ignore that the one for September ever happened. So, it might be one of those woulda, coulda, shoulda type situations where maybe that would have pushed interest rates into an even better direction. But on the flip side, it could have pushed them worse. So if nothing else, things are kind of hovering in the same range for the first time in quite a while, which is a positive in my opinion.
Okay, great. Yeah, because everybody focuses on those interest rates for sure. So we would predict interest rates for the rest of the year, but we'll probably hold off on that.
If I
Given the
could do that, I
circumstances.
wouldn't do this.
I
Yeah,
know,
if I could
right?
do that, I'd go bet horse races and football games and make my money that way.
So there you go. So just to kind of sum it up a little bit, if you are a buyer, and if Matt is not your loan officer, sorry for you. But if he is, he's already asking the right questions. But if not, take this podcast and go ask some questions of your lender to make sure you know where you are. If you're thinking about buying something, don't let this necessarily slow you down. Let's just ask some questions and get some information up front. I know with a lot of my buyer clients, they've got leases that are coming to an end. So you definitely have to get started maybe a little bit earlier to make sure that we can get something closed before you're left without a place to live. Obviously, temporary housing is not the easiest thing to find. Trust me on that one. So if we can avoid it, we want to. So I would say get started even a little bit sooner, just in case this drags on for a little bit. If you're in the middle of a transaction, if you're a seller, don't get nervous. Again, ask the right questions to find out what's going on and look at it as a speed bump, a minor delay. Don't think that it's never going to close. But again, you have to make plans accordingly. Just make sure, that again, you're getting those questions answered and you're factoring in a little bit of extra time just in case. And don't just assume that everything's okay and is going to hit that 30-ish day mark. Maybe it will, maybe it won't. Again, conventional loans, not really a huge slowdown on those. So maybe a few less questions that you have to ask about that. Anything else you can think of?
Not without getting too boring.
Okay. Well, we don't want boring. This is probably one of our more serious podcasts just because the government shut down. But other than that, we're always here to make sure that your next move is a smart move. And if you have questions about real estate and or financing and or maybe a few life questions, we sometimes can help with those too. You can reach out to me and Riley Caldwell, not your ordinary agent. And you can reach out to Matt at
Matt Wilson Mortgages. Just Google it. You'll find me. When you find my face, you found me.
Okay, perfect. So anyway, if you have questions, reach out to us and we can't wait to see you on our next podcast coming up soon.